Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, good morning, guys. Welcome back. Hope you guys are doing well. We're here for probably one of the bigger events of this week. Well, definitely of this week, but even of this month. Today we are gathered for Core PCE. Now, Core PCE is so important to the markets here today because it is the Fed's preferred measurement of inflation. Now, what does that mean, and why should you care? Well, the Fed has seen all the same stuff that we have, which has been a round or another round of really strong economic data out of the US. And they see exactly what we see in the 2-year, the 10-year, and the 20-year yields being offered, or the bid basically, on the bond market. Now, that bond market and the bid that it is reflecting is throwing up some red flags to the rate cut camp. Okay, now 5% on the 2-year yield is a fresh high of this year, guys. Well, it's a fresh high where we've actually closed up in this region. You know, we are very, very much. We tested intraday high of the year on the 2-year government bond. Now, what is that telling you? That's telling you that the bond market, right, which is, of course, traders who are bidding whether or not they want to buy a bond or not, it's telling you that they expect inflation to stay sticky and they expect interest rates not to come down as soon as perhaps people thought. And you know, this has been a theme that we've been talking about on the channel for a little while. It's also why I've avoided too much long interest on the S&P 500 and the NASDAQ, was because, you know, when we rallied initially, I was all for it because it looked like, you know, yields were really meaningfully coming down and that we could see rate cuts. And, you know, I was in that move, especially when the market had started to get really bearish, thinking we were going to go incredibly hawkish again. There's some great risk reward. Fast forward to now, is this a dip buying opportunity? Well, full disclosure, I already have bought some stuff. Some were better buys than others, but I'll give you just a couple quick ones. XLC, I have a bullish position on XLC. This one will expire today. I have several options that I've sold that are looking pretty good. There's a couple that I will likely get assigned on, which means that I will be buying the shares underlying. Now, I don't want to get too far into options because we have a lot of stuff to cross over into, but I have a few bullish positions on the indices as is in certain sectors of the economy that I like more than others. That's why I use these sector ETFs like XLC, XLY, XLK. Go look them up if you'd like to learn more about what those are. Anyways, as we approach this number, we have a couple things to update everyone on. If you were not, you know, paying attention to the earnings stuff that happened yesterday, we had Google and Microsoft. Both, I believe, had very good reactions. Microsoft is, I believe right now, it is the biggest company in the United States. I think it beat out Apple, and Nvidia is trying to catch up to it now. But, you know, Microsoft had some really good numbers. They beat on the top and bottom line. Markets just loved this, right? And I know 4% is not that dramatic of a move for a big tech name. You know, we saw Meta like down like 17 or 18% when it had some talks about investing in the metaverse that people didn't like. My point with showing you this, though, is Microsoft is like on a different level. It is so big. It is such a massive company and it's so important to the market. This was a positive sign for the stock market. And I'm waiting on a couple signals here before I can really take a momentum trade to the upside. I'd like to see the market move higher, but we have to talk about these tech names. Meta, huge drop, recovery move a little bit there. Google, so Google had a huge, great earnings, and the FOMO was real for me, guys. This is a company that I love. It's probably my favorite stock individual company in the market. I love Google. My entire business is built around Google. I love their products, and I have a lot of experience in developing in Google, and I just think it's a remarkable company and product. And quick fun fact: I missed out on this earnings, but I have spoken with my dad before in the past. He almost bought shares in Google back in like 2000, which I can't remember why he told me he didn't. And he's had plenty of other great calls over the years, but we talk about Google as just this monster trade that could have been. But back in 2000, right? Google's trading way down. Was it even public in 2000? Maybe I'm thinking like 2008 or 2009 or whatever, after the big sell off. Anyways, couple things on the radar here today. So for PCE numbers, how is this going to impact for currency traders? Let's start there. So if you're somebody watching the dollar index today, sorry, I got to get my charts back in line. So if you're looking at the dollar index here today, guys, what you'll probably want to see is, if you're a bull, right? If you want to see this thing bottom out and potentially kind of break through and start trending higher again, you likely want to see sticky inflation. Now, is sticky inflation good or bad? Well, it depends which thing you're asking about. Stubborn inflation could be taken two ways. You could say, oh, that's terrible, it's going to hurt the consumer, we could have a recession. Or you could say sticky inflation is just demand side being very strong, meaning people are getting paid and they're going out and spending their money, and that's a good sign of the economy, right? So inflation's a tricky subject. Is it, however, supply-based inflation? That is not so bueno, right? During COVID, when the whole world locked up, there are still to this day many supply constraints that are inflationary. I'll give you a quick example of inflation caused by supply. If two countries start to go to war with each other, and the supply of oil in the world gets locked up, whether it be from sanctions or a refusal to trade with certain countries, point being, if there's less oil available to the world because of a war, suddenly what happens to the price of oil? It goes up. That is prices rising, which is inflation, right? Because then everything else has to go up in price too. Because if you're a grocery store and you pay for a transportation of goods to your store, and they say, hey, our costs went up because oil price went up, you say, okay, I guess my prices in the store have to go up too, right? That's why the grocery store, was shocking for a lot of us. That, in combination with the Fed printing a bajillion, quadrillion dollars, that's inflationary. So, there's a couple things that you could take out of this inflationary report today. What I'm looking for, we've got 5 minutes to go, is if this number is lighter than expected, the stock market might actually rally pretty good, because that would be in combination with what was, relatively, you have beats on a lot of big tech earnings. Meta was not, maybe their guidance of the company is not so bad, but the demand side of their company, the earnings, the revenue, still not bad. Microsoft, good. Google, good. Okay, so where are we left with? We got the big names doing all right. I believe we had Chevron and Exxon this morning. I believe Chevron beat on the top and bottom, and Exxon missed on one, beat on the other. Point is, earnings are not coming out terrible. So people who thought that might be the case, we're not seeing that just yet, right? There's still more to report. We still have NVIDIA ahead. But I'd like to see a couple signals. If we see inflation cooling, there is perhaps an argument for, a continuation to the upside for indices. Respire Rhythm, thank you so much for the $5 donation. I very much appreciate that. Any opinion on the yen and the Bank of Japan last night? I have not even looked at the yen. Did we have, well, let's look at the chart first. Let's see what's going on with the dollar yen. Whoo, okay, so that's going to tell me right off the bat that they said something that was weak for the yen. My guess, and I'm uneducated on this, I haven't even looked. I really should have. I didn't know that there was such a big decision made, apparently. My guess is that they are, more dovishness, right? They've had this theme of trying to defend the yen, and now that seems to be unwinding, there it goes. I mean, that is a move to the upside. And we've been bullish on the dollar yen. I don't want to pat myself on the back because I don't have any yen. I'm not long this currency pair, but we have pointed out that this has looked really strong, and that any wavering of the Bank of Japan, you know, I can't help but say a little bit of little pat on myself on the back, because we talked about so many times. People said, watch out for Bank of Japan intervention. We had that comment on the channel like 500 times. I'm not even kidding. It was so frequent. People are like, you sell the yen here, or you sell the dollar yen here. The Bank of Japan, don't sleep on them. But I pointed out aggressively the comparison to the Swiss National Bank in 2015, where they said they were going to support their currency or keep their currency weak relative to the euro at a certain point. And they took their word back, and the market fell out of the entire universe, right? It fell, that Euro Swiss chart. If you don't know what I'm talking about,
Hey guys, it's me, Chandler, the editor. The power went out in the building again. I don't know what's going on. It's not us, because we're renting space, so I don't know what's happening. But oh, Nick's coming back in his phone. I had the news pulled up just in case we were gonna miss it. Here, I'll give you.
All right, I'm back on my phone. Can you guys hear me?
We're making do with what we can here.
Yep. Dang, sorry about that, guys. Yeah, we've got power outage in the building. I don't know why it's been such a persistent issue for our building. But Chandler, you got the news up. What we got numbers coming in?
News.
Okay.
Yep, the news is coming as soon as we get it. So it's pending.
Yep. Thanks for jumping in here, Chandler. You saved the day.
Yeah, no problem. I don't know what it is. Somebody keeps tripping on the cord.
Yeah. Okay. So PCE came in line, it looks like, at 0.2% month over month. Is that right? Or is that 0.3?
0.3.
Okay. 0.3. Okay, guys. So came in as expected. Chandler, do you have your trading view pulled up by any chance?
No, but I can see about finding it.
Dollar jumping, people are saying. Guys, you're gonna have to let me know. Rip Russell position. I sold out of, or I'm closed out of my Russell. I took profits on it. Let's see what else. NASDAQ dying is can you still hear me if I go out of my phone?
I can hear you right now.
Okay, wait. Can you still hear me now?
Yes.
Oh, okay. So I can look at the charts on my phone at least. Let's see what we got here. NASDAQ popped here a little bit. The Russell jumped. Dow slightly up. S&P slightly up. So it's pretty much an in-line to expectations.
Okay, I've got my trading view up. What's
Okay.
relevant? What should I pull up?
Pull up the dollar, DXY.
Here we go.
Okay, dollar index. So slightly down on the news here. And yeah, very, very interesting stuff. Your phone takes nice. Yeah, it's not ideal, but we're making do. Hopefully the power comes right back on. But you know, dollar falling. Yep, dollar down. Gold up. Chandler, can you pull up gold for us? I'm curious what gold looks like.
Let's see. Should I go to a different time?
Go for like you're on the 1 hour. The 1 hour is good. Okay, so gold making a slight move. Now, again, guys, what we were looking out of this, and I think where you're left with this, is earnings were pretty good from some of the big tech names. And at the same time, inflation concerns that they were going to be hot due to yesterday's print are not super terrifying now. So I think the market is a sigh of relief right now, just because you've got inflation that's not devastatingly high like people might have feared, and at the same time you had stock earnings that are pretty good. So stock market looks okay. I think GDP was a little bit light. Yields are still up, but maybe they're coming down a little bit. Chandler, try this chart, US 10Y.
Let's see.
You may have it.
I may have to search for it. Uh-oh.
Yeah, you may just search for it.
How do I search for it? Is it right here?
If you just, yeah, there you go. Or actually, no. So just click like in the top left. There's the symbol. Yeah, click that and just type US 10Y. There it is.
I know this after editing all the videos.
No, you're good. Okay, so US 10-year is slightly down on this. So yields are down. Okay. Paints an interesting story overall. A little bit of sigh of relief, it seems like, in the market in terms of inflation concerns. So we will we'll have to keep an eye on it. Chandler, if you wanna just back out, I might just do some plugs, and then we'll maybe call it until this power comes back on.
Okay. Yeah, that sounds like a plan.
Okay, sounds good. Okay, guys, so I just wanted to also let you know, if you have not already taken advantage of our Edge Finder sale, today's Friday. Yep. So today's the last day. So if you have not already taken advantage of the 45% off discount, we're going to drop a link here in the chat. If you, again, are looking to get a copy of the Edge Finder, this is your last chance before that sale ends. Take advantage of it. Click the link being dropped in the chat right now. You can speak with someone on our staff about that. There it is. Boom. Click that link. You get access to the Edge Finder for 45% off before the sale does end. Take advantage of that for sure. With that said, guys, we're going to wrap it there until this power comes back on. We're dealing with the situation, so apologies for the delay, for the technical difficulties, but we will be back with more content as soon as that light comes back on. Thanks, guys, for watching, and we'll see you next time.
Thanks again for watching today's show.